Nkem Azinge is a currency trader at UBA. She joins me for a mid-week review of Nigeria's money markets. Nkem, glad you could make time to join us for this conversation today. Could you talk us through what factors have been shaping activities at the markets so far?
Hi, Christy. Thanks for having me. Like you said, what has basically shaped trading activities this week has been the lack of liquidity in the system. We saw that there was a retail FX debit. There was also a CRR debit last week. And then yesterday, there was an AMCON debit as well. So that has literally led the money market into negative, basically. The market opened at a repo today, so that has affected markets, basically. The Treasury bills market has been pretty quiet because of this lack of liquidity. So the fixed income space has been quiet because of the lack of liquidity.
So now, even Nkem, as a financial journalist, I'm getting investors who are desperate for advice, who are trying to wriggle some words of advice out of my mouth to tell them where to put their money. And that makes me just wonder what kind of pressure they put on analysts like yourself and investment advisors. What do you say to them when they come to you now? Where should the money go?
The market is really quiet. There isn't a lot driving activities. What traders have been paying attention to is what's going to happen this week and this month, basically, that's going to drive trading activities for the rest of the month. We expect that there would be coupon payments. So with that coupon payment, we'll see bullish sentiment in the bond space, and we'll probably see yields go down. But still, as it is, like we've said over the weeks, the most attractive fixed income space is the bond space because it still offers the highest yield. It is the riskiest, but then it offers the highest yield right now. So that is the most attractive space. So what we've seen people do is move money from Treasury bill space to stay on the short end of the bond space where they can get better yields on the 1 year, on the 2-year bond as opposed to the 1-year Treasury bills. But at the same time, just given the fact that the FG needs to borrow more, we've been hampering on that over the last couple of weeks, the need for the FG to fill up its fiscal gap, and there's a need to borrow. A few investors are very skeptical about going long at rates at these levels. So what we've also seen is people try to play on the short end of the curve, stay in bank deposits, where they could get yields as high as rates as high as 5%, as opposed to buying, let's say, a mid-tenor bond and getting the same rate. So you see that different investors with different mindsets right now. The fact that the FG needs to borrow, and we expect the bond calendar coming out, that really is what would give a direction as to what's going to happen to yields going forward and where would be the best place to play.
And given the number of changes that the FX space is having to deal with in the past few days, what do you reckon is the true value of the naira at this time?
We're all aware of the fact that the World Bank has talked about the need to unify the different exchange rates windows in Nigeria, and the fact that we expect a $1.5 billion loan from them has made it important that this is done quickly. So that's probably why we've seen this happen. So there's been a technical devaluation from 360 to 380. We see that the INE market trades around 386, 387 levels. And the CBN proxy is also at 380.5 levels. So basically, this just shows that the CBN is trying to pull all rates together to be around the 380 level. So that's most likely the true rate of the naira.